Are you handling the pinch of tough economic times? Concerned about your financial future? Well, don't worry. Today, we're sharing a smart plan that can assist you not just to survive, but to thrive in these problematic times. And who better to guide us than the legendary Warren Buffett, whose timeless directions have weathered many financial storms? We're diving into a hot topic: how to build wealth in the 2024 recession. Stick with us. It's about to get exciting because we've got some revolutionary revelations coming your way, and I know you don't want to miss these eye-opening tips. So let's jump into it. Let's start with Buffett's idea that firms with intrinsic value are winners. Now, don't let those fancy words scare you off. What he points out is that companies like Apple are not just selling pricey phones, they're offering a whole package of goodies like Apple TV and Apple Music. It's like acquiring a deluxe combo meal instead of just a burger. So, here's the deal. Even though Apple gadgets may seem a bit expensive up front, people keep coming back for more because they're hooked on all the cool stuff Apple offers. And guess what? This can be your ticket to riding out market ups and downs like a champ. When the chance to add a strong company like Apple to your investment portfolio knocks, don't hesitate, grab it.
I mean, we own 5.5% or a little over of Apple. It's probably the best business I know in the world. And we own 5.5% of it. And that is a bigger commitment that we have in anything except insurance.
Envision sailing through the storm of market changes with a reliable company by your side. It's like having a trusty umbrella in a financial downpour. So, what are you waiting for? Follow Buffett's lead, spot those companies with intrinsic value like Apple, and set yourself up for financial success in 2024. Now, let's move to the next part. Picture this. Just like gravity affects everything around us, interest rates have a powerful influence on our financial world. Let me break it down in simple terms. It's like a magical equation. Think of interest rates as the fuel for your money engine. When rates are low, it's like the green light for businesses and individuals to easily borrow money. This sets off a chain reaction. More money gets spent, more profits roll in, and guess what? The value of assets goes up, just like when you're stacking up your winnings in a game. Now let's talk about gravity, the force that keeps us grounded. Imagine if gravity took a little break and things started to float around. Similarly, when interest rates rise, it's like gravity getting stronger. Money becomes a bit heavier, making assets worth a tad less. But here's the silver lining. In 2024, if interest rates are on the rise, it could be your golden ticket to building wealth. Warren Buffett, the investment guru, knows the game well. When others are running scared, smart investors see opportunities. So here's the scoop. If you've got some cash tucked away, consider investing when interest rates climb. It's like buying low and selling high, a classic strategy to supercharge your wealth. Don't miss out on this chance to make your money work for you. Keep your eyes peeled, and when the winds of change blow, ride the wave to financial success. It's your time to shine, investor extraordinaire. The next beneficial piece of advice from the legendary investor Warren Buffett that you definitely shouldn't overlook. Here's the deal. Before plunging into the investing game, make sure you've got a solid safety net. Think of it like this. Before you start playing with your money, have a little stash saved up for those rainy days. Why, you ask? Well, imagine this. The economy goes on a bit of a roller coaster ride, and suddenly things aren't looking so rosy. Now, if you've got all your money tied up in investments and the market takes a dip, you might find yourself in a tight spot. That's where having some savings comes in handy. It's like having a backup plan, a safety cushion to fall back on when times get tough. Buffett's wisdom teaches us that investing isn't about chasing every little up and down in the market. Nope, it's about playing the long game. He suggests planting your investment seeds and letting them grow for at least 7 years. Why 7? Well, because in that time frame, you'll see the economy go through its ups and downs, what we call cycles. And by staying invested through these cycles, you give your money the chance to ride out the storms and come out stronger on the other side. So, here's the game plan. Before you start investing, make sure you've got your emergency fund sorted, enough to cover your expenses for 3 to 6 months. Once that's in place, start planting those investment seeds and let them grow for the long haul. Remember, it's not about timing the market, it's about time in the market.
mistake. I don't know anybody that can time markets over the years. A lot of people thought they can.
Follow Buffett's advice, and you'll be well on your way to building wealth even in the midst of a recession. Buffett's wisdom revolves around the idea that stocks are not everyone's cup of tea. Why, you ask? Well, according to the Oracle of Omaha, investing in stocks requires a particular mindset. It's not a quick cash grab, it's a long-term game. Imagine this. The economy is like a constantly shifting puzzle. Interest rates go up and down, and various factors dance around the stock market, affecting its moves. Buffett's key point is this: if you can't let your money chill and grow without constantly meddling, maybe stocks aren't for you. In other words, if you're the type to check your investment portfolio every hour and stress about every little market hiccup, stocks might not be the ideal choice. Buffett wants you to understand that the stock market isn't a static playground. It's a dynamic field where patience and a steady hand can make all the difference. Now, you're probably wondering, what should I do to build wealth during this recession? Well, Buffett's not saying to avoid stocks altogether. Instead, he suggests that you take a good look in the mirror and assess your own financial personality. If you're the kind of person who can leave your investments alone, letting them ride the waves of the market, then stocks could be your ticket to wealth-building success. But if the idea of market fluctuations keeps you up at night, perhaps it's time to explore other investment options that align with your comfort level. Now it's time for another super tip. You see, during a bear market, which is when stock prices are down, Buffett likes to call himself a net buyer of stocks. What does that mean? It means he's busy scooping up stocks like a smart shopper at a sale, buying more than he's selling. Now let's break it down in simple terms. Recessions happen when the economy slows down, and often it's because interest rates are high. Higher interest rates can make your stock values drop. But here's where Buffett's wisdom comes in handy. He sees this as an opportunity to snag stocks at a bargain. If you're confident enough to choose and hold on to stocks, 2024 could be your golden ticket. Think of it like buying your favorite snacks when they're on sale. You get more for your money. In this case, you could grab stocks that might be a bit pricey in normal times. So why is Buffett so keen on buying during tough times? Because he believes in the long game. By investing wisely and holding on to those stocks, you could potentially see your wealth grow when the market bounces back. Now, Buffett has this really cool piece of advice that's super simple but incredibly powerful. You see, when you're thinking about buying into a business, whether you're a total pro or just starting out, there's a whole bunch of options out there. It can get overwhelming, right? But Buffett, he likes to keep things easy peasy. Here's the scoop. Buffett once said that before you invest a single penny, you should be able to do something as simple as jotting down on a piece of paper exactly why you want to own that particular business. Yep, that's it. No fancy jargon or complicated formulas. Just grab a pad and pen and ask yourself, why do I want to be a part of this business? Now let's break it down even more. Say you're thinking about investing in a company that sells sneakers. You got to ask yourself, why do I want to own a piece of this sneaker business? Maybe it's because you believe everyone needs sneakers, no matter what the economy's doing, or perhaps you've noticed that this company has a super loyal customer base who keep coming back for more. See, it's all about understanding what makes that business tick. So why is this so important, especially in a recession? Well, think about it like this. When you truly understand the businesses you're investing in, you're not just throwing your money into the wind and hoping for the best. You're making informed decisions based on real knowledge, and that can help you weather the storm even when times are tough. There you have it, folks. The Warren Buffett 2024 Recession Blueprint for Building Wealth. I hope you found these insights valuable and, more importantly, actionable. Remember, these principles have stood the test of time, and by incorporating them into your financial strategy, you're setting yourself up for success. If you enjoyed this video, don't forget to give it a thumbs up, subscribe for more content, and share it with your friends who might need a financial boost. Until next time, stay financially savvy, and I'll catch you in the next video. Cheers to building wealth in 2024.